Hi, it's Dwyer, gamblersadvisory.com, a free site, money1776.com, a free site. It is Tuesday, September 27th, 2022. Let's talk money. This is not a sports betting video. Let's talk money, one of these periodic money videos. But first, remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. Now, a viewer sent me a private message. I thank him for it. He asked for my views on Alibaba, Jack Ma's company. You understand that Jack Ma in China at times has been persona non grata. You understand that the government in China is much more centralized in terms of power than the United States government, right? Understand Jack Ma went missing for a while after criticizing the government. So, given that regulatory backdrop, the fact that the government of China can pick winners and losers, I'm bullish on Alibaba, right? Understand I have owned Alibaba in the past. I don't have an ownership interest now. I've owned Amazon in the past. Much of what Amazon has been doing, and you're hearing my system here in the background. Why don't I refer to that company as A? Because if I say the official name, bells and whistles will go off here in the background. You know, what A is doing is breathtaking. I was in a sports bar the other day, the Lazy Dog in Cupertino, California, and there was some panic because it was a Thursday night and the NFL was on, but the waitresses did not know that you could actually get Amazon Prime on DirecTV. Well, to make a long story short, Amazon here in the United States, who we assume is just a retailer, has its arms in several different businesses, right? Sports is one of them. Understand, Amazon Web Services is exploding by leaps and bounds. Now, Alibaba has modeled itself after Amazon, but Alibaba has some inherent advantages, right? There are more people online in China than there are people in the United States. Let me repeat that. There are more people online in China than there are people in the United States. The economies of scale are much bigger for Alibaba than they are for Amazon. Right now, in fairness to Amazon, Amazon has an international presence, right? But just to understand, Alibaba has a cloud, right? They call it Alibaba Cloud, right? Alibaba has great multiples. One of the underappreciated stories of 2022 are the demographics, right? India, right next to China, is about to surpass China in terms of population. Understand that India has already surpassed the United Kingdom in terms of economy, right? The size of the economy. Understand the African continent, where China is investing a lot of money, has more than 1.2 billion people. Right here in this portion of the Western Hemisphere, right? The United States of America, I don't believe that Americans know that Africa right now has more people than the United States and Canada combined, right? Has more than twice as many people as the United States and Canada combined. We don't really appreciate the demographics and understand the infrastructure is just rolling out in Asia. 35 years ago, China was nowhere close to the economic power that it is right now. If you look at the multiples on Alibaba, you'll be astonished. You have reasonable multiples, right? The forward PE is below 12x, right? So, yes, I'm bullish on Alibaba. Let's segue the conversation to um, the world in general and why this time is one of arguably the best times to take extremely high risks with the understanding that if a bet goes in your direction, you might be set for life. Right now, I get it. The bond market, which is much bigger than the stock market, is getting killed. The intelligentsia around all of us firmly recognize that the rate hikes are going to lead to, among other things, increased unemployment. Right, folks? There's misery coming. The intelligentsia realize that it's going to lead to food shortages. I hope you've gone out and I hope you've bought a freezer. Speaking of great investments, that's one of the best investments you can make. You might recall the supply chain breakdowns when COVID first hit. Maybe you were like me and you went into a supermarket. You saw a lot of people fighting over the toilet paper left in the toilet paper aisle. Then, as you walked around the supermarket, you saw a lot of empty shelves. Folks, this is in the Bay Area. You saw a lot of empty shelves. You went to the meat section, my goodness, there was hardly anything there. Everyone was wearing a mask. No one knew what was going on. If you spoke with the staff at your supermarket, they shrugged at you about 40% of the time, couldn't answer your questions. Everyone was grabbing bottled water. Folks, that wasn't that long ago, right? COVID-19, the 19 stands for 2019. You understand how fast supply chain problems can develop. Well, right now, you have a lot of companies that were, in effect, zombie companies that are part of your supply chain, right? They are debtors. When you raise the cost of borrowing, many of them are not going to be able to survive. You're going to have disruptions. The public isn't fully ready for it because the powers that be haven't really leveled with us. And understand, the young, good-looking journalists on your cable news network might not have lived through the 1970s. They might not know what stagflation looks like, right? They may not have been through a multi-year bear market. Understand, folks, the S&P 500, if you average it out, was relatively flat from 1968 until the early 80s, right? I've mentioned this in other videos. You have a lot of people who were very successful on Wall Street who talk about how having a job on Wall Street in the late 70s, early 80s was the kind of thing that did not pay you as much, according to Jim Chanos, who lived the experience, famed investor, short seller, as driving a truck or working in other well-paying blue-collar jobs. Right? Jim Chanos talks about how he made more money working during the summers, right, late in college, than he did when he first got to Wall Street. I can tell you, when I was a kid, I was riding the subway a lot. I lived in Queens. I went to high school in the Bronx. So I would pass through Manhattan, right? What I want people to realize is back then, Manhattan was like an episode of Beretta. Go back to the 70s, TV shows, Kojak, Beretta, right? In Beretta, one of the main characters who Beretta got information from, Robert Blake was a cop in that show, was a character called Rooster. Folks, this was not cable TV, this was broadcast TV. This is what young kids like me were watching. Shows like Beretta were popular shows. And the show was so edgy, sometimes you would see Rooster talking with women who looked young. You understood that Rooster was a pimp, right? I can tell you when I was in high school, late 70s, early 80s, I would go down to, and I'm a male, right? I would go down to the 42nd Street area, and you would see kids your age being pimped, right? 42nd Street was not a Disneyland type of experience back then. There was poverty in parts of Manhattan. Right now, unfortunately, young people around us have no idea. They think everything started in the go-go 1980s. We're headed to a 1970s redux type of situation. Right? You're going to have higher unemployment. You're going to have higher crime. Crime is going to increasingly become part of the political dialogue. Now we understand that politicians want to be reelected. If you're part of the party in power, are you really going to talk to people about the increased unemployment and the increased food shortages that are on the horizon? The price changes you're going to have that are on the horizon. Right, folks? Let me say this. The Atlanta Fed, you have to actually dig deep to get data here. The Atlanta Fed talks about the unaffordability of housing in certain areas. And they talk about the multiple, right? The housing price to the average earnings of people living in that area. Right, folks? You have areas, particularly in California, where you have to earn the average wage for 14 years or higher to afford the local home. When I was a kid, particularly when I was a young boy, that number was 5 or less. Right? The older generation, the baby boomers, lived a different life than kids today are living. Right? These multiples are going to revert to the mean. Right? Many of them are bubbles. Right? So, let me just say, it's exactly in times like this that there are some deals that no one appreciates. That you look on a balance sheet, a cash flow statement, and you see a bunch of red, and you realize that if the company can weather this economic downturn, they're set up for success. Right? Understand, when Reagan takes office, and I'm not here shilling for any political party, right? When I vote, last 3 presidential elections, I've voted Libertarian. right? Just food for thought. The last presidential candidate who was a Republican or Democrat who I voted for was Barack Obama the first time he ran, right? So I'm not shilling for any party. But people need to understand that when Reagan took office, there was what he got elected on it, a misery index, right? I encourage young people to Google that. You'd be shocked how dark economic times were back then. You'd be shocked at the interest rate you got on sovereign debt here in the United States, right? That set up people for life. They were getting double-digit returns on U.S. bonds. So what I want people to do, because understand, that era then led to the latter part of the 1980s. Then, after some downtimes in the early 90s, the economy takes off, right? The internet lowers transactional costs. Bill Clinton reached a point where he was bulletproof. Ken Starr could not take him down. Right? Understand that period of explosive growth took place because we went through the late 70s, early 80s. Right? Even a forest needs its dead wood to be burned off to fully thrive. Right? So, what I want people to do is to just get a macro view here. Things aren't happening randomly. Right now in the United States, I want people to understand that we are exporting inflation. Right? Just understand that as they raise the value of the dollar, which is what they're doing when they raise interest rates, right? That's killing people overseas, absolutely killing them, who are holders of dollar-denominated debt. In other words, let's say I'm in Argentina. I needed money. We have local emergencies. Banks don't want to lend me money denominated in the Argentinian currency. So I agree to a dollar-denominated debt. I'm going to pay the loan back in dollars. Then they start hiking the value of the dollar on me. So if I owe you, we'll just pick round numbers, $1,000. Understand, by increasing the value of the dollar, that makes it harder for me to repay my dollar-denominated debt. Now, in international commerce, it is very important to understand that you need to pay attention to the crises that are taking place with borrowers, with your allies, right? Because, folks, if there's too much misery with the borrowers, the creditors are not going to be paid back. Whatever military alliance you have that involves your ally who's dealing with, let's say, an energy crisis, very high electricity costs, right? Their own rising unemployment. If you're dealing with that, you need to make sure that you hiking your world reserve currency is not going to lead to social unrest, revolution, right? You have a deal with this government in this country. If they storm the palace, if they chase the government out of there, as they did in Sri Lanka, right? The new group might not give a damn about you. Worse yet, the new group might go around, might renounce their debt to you, and might go around nationalizing private businesses, stiffing investors. Isn't that what just happened, by the way, in Germany, where Germany nationalized an energy company? Right? And so, what I want people to realize is that because of problems in the world, because Germany has an energy problem, because the British pound, let's not speculate about what's going to happen. Let's talk about what's already happened. Because the British pound is dropping in market value. Right, folks? You have an inexperienced prime minister, right? She just became prime minister 5 minutes ago. Right? You have a change in the royal family. Understand, Queen Elizabeth connoted stability, familiarity. Right? For decades, the British people knew who the monarch was. Now you have a guy, when I was a kid, we called him Bonnie Prince Charlie. You have a guy who is new in the position. Right? New. You don't know if you're going to get that stability. Right? You understood that when a Prince Andrew fell out with the Queen, or when a Meghan Markle fell out with the Queen, you understood they fell out. Right? They didn't speak for the monarch. There was a bright line. With Charlie, we're figuring out the lay of the land right now. And of course, the UK has an economic crisis. I need for people to realize that if the pound is dropping in value and you're a pensioner, they can tell you, oh, you have a double or triple lock on your pension. What are they going to pay you in? Devalued pounds? Folks, the currency devaluation changes the game in the pension market. So given the pain, and that's what it is, given the pain, our allies and international borrowers are having right now, it's just a matter of time before they resort to Argentinian type money printing. Right? This is what happens. People are freezing during the winter, and the local government understands we need to get money into the economy. So then they start printing money. In other words, they make the currency cheaper. They need to distribute it. People need to have money because people need to get by this emergency. Fill in the blank on what the emergency is. Energy crisis, increased unemployment, pension crisis. So, for investors like us, this creates opportunity. Now, nothing I say in this video should be construed as investment advice. I'm just telling you, as a layperson, what I like, what I'm looking at, what I'm thinking of pursuing. Right? I've told you that I have Alibaba on my radar, but I don't own any at the moment. Right? You want to think through investments before you make them. You want to have an idea on what the company does and where they're situated in the world economy, what their future chances of success are, well before you invest any money. You want to do your research. Everything is a process. So let's tempt fate here. Just understand, because I believe there's going to be a pivot, right? And I'm talking about a pivot, let's say, in the next 4 months, right? Because things are deteriorating and we have to address financial problems around the globe. That's going to lead to huge upside, I think. Right? Again, I'm just telling you my opinion. Don't consider this to be financial advice. The risk here is huge. But understand, this video is really about speculation. You'd be surprised how these huge risks, if you research them right, could bear fruit. Items that are limited supply, where the demand is somewhat inelastic, are going to explode. There's an energy crisis. That tells me there's a shortage of energy. I've been watching the price of a barrel of oil like everyone else. I see it's below 100. I don't believe that can last. I believe a barrel of oil goes north of 100. Right? Understand, fossil fuels, they're finite. I believe fossil fuels, you know, are going to be with us for quite some time. We all want renewable energy. I'm not saying renewable energy is a bad thing. I'm not saying that at all. But what I am saying is that there's a time horizon problem here. Renewable energy is not going to be able to replace our dependence. That's what it is on fossil fuels for quite some time. You know, energy is a good investment when the word dependence is used in talking about society's reliance on it. You know it's a good investment when you find out that some of the most robust economies in the world, the German economy, right now is too dependent on fossil fuels. They need to buy from China, right? Which, of course, is acquiring it from Russia, who supposedly is getting sanctioned. I believe, and I've mentioned this in an earlier video, the ETFs, XOP, XLE, um, Occidental, which Warren Buffett is loading up on, Exxon, which has an excellent dividend history. I believe those are going to do well as we pivot. Let's get deeper. You start changing the value of the money, right? Which is going to happen all over the place. You can imagine in the UK, they're printing pounds, right? If you're going to start playing with the value of the money, then that means that limited supply sound money is going to take off. Not just gold, not just silver, but yes, Bitcoin. Right, folks? The minute the Fed says, we're not hiking the Fed funds rate 75 basis points this time, the minute they skip a hike or drop it to 50 or drop it to 25, folks, you'll understand that economic times are bad out there. They're dropping the rate for a reason, right? They're loosening up the dollar for a reason, right? Hard economic realities. And you're also going to realize that there are going to be a lot of investors who are going to say, look, I can't deal with these changing valuations on currency. I need gold, finite. I need Bitcoin, finite. I need to make sure my money's safe. I can't put the money in the bond market because that's been up and down. Well, let's talk about an even riskier bet right now. Because I believe there's going to be a pivot. What I want people to consider is you understand that current price levels are distorted. If you can find a business that's revolutionary, that actually has a technological edge, first mover advantage, on its opposition, that already has boots on the ground, that already has participation in real world transactions. And if you could lock in the price for, let's say, until 2025, right? If you could agree to buy at a certain price now, right? Commit to making the purchase no later than 2025 in a growing business, right? Has a lot of red all over their financial documents right now. Are losing money, but you understand this business has a financial reserve. In a part of the economy that is necessary for life, in this case, housing, right? And you understand, I expect housing to go down a lot before 2025. But here, we're just talking about a market maker, right? A tech company that is just pro consumer and is making real estate transactions easier. If you could lock in their currently depressed price and show up in 2025, yes, you make money waiting while prices shift. If you could do that, you might have stumbled on really one of the great investments available. Well, right now, what I'm doing, and I'm just sharing what I'm doing, and understand I'm a speculator. This is high risk. Okay, I'm not trying to hit singles, I'm trying to hit home runs. I'm trying to be set up where an investment just, opens the barn door and brings in abundance, right? What I want people to do, and you need to research the investment vehicles available to you, is to look at long-term call options on a company called Open Door Technologies, right? If you know about call options, great, good for you. If you don't know about call options, you need to investigate call options even before you investigate Open Door Technologies, right? Open Door Technologies is making the real estate industry much more consumer friendly, right? They allow you to buy houses online if you choose, to finance your house online, right? To digitally look at several homes, to have some amount of price certainty. In other words, this is a major challenge to the traditional real estate market. Full disclosure, I have a broker's license. I don't use it. I'm primarily a lawyer, but I had some broker clients. And I thought, well, this would be a good marketing tool, right? After all, I'm in the overpriced Bay Area, right? Well, just understand, Open Door Technologies to me has huge upside. As you can imagine, with the housing market being as bearish as can recently be remembered, Open Door is hemorrhaging money. This is a money loser right now, right? People are wrongly equating them with Zillow, which of course got out of the house flipping market, right? Again, Open Door is different than Zillow. This is a market maker. They want to help you buy the home, right? They want to help you do everything online, right? They'll buy homes, then they'll sell them to you. They're operating on algorithms. Folks, they're down big, understand. We're in an era right now where quality companies are down big. I would question how Amazon can have margins of 35%.
In March, the average high temperature slightly decreased.
Hold on one second.
From a hot 32.5 degrees Celsius, 90.5 degrees.
I should have known better than to say the A word. Understand A has margins of greater than 35% right now on their Amazon Web Services wing, right? But yet they're down. This is even as they venture into sports and have an 11-year deal. Exclusive rights on Thursday Night Football. Right? Just understand you have a lot of quality that's been caught in this downdraft. Even when the company is extremely well situated. I believe Open Door is. And because Open Door right now is going for a pittance, right? Well off its all-time high. I'm not even going to say the price here. I want you to do the research on it. What I want people to realize is you're getting Open Door right now for, let's say, less than $5 a share. You can, rather than go out there and swoop up a bunch of Open Door, you can buy a call option that expires in 2025. 2025. Understand, I know people hate options. Most people who deal with options lose money. Okay, agreed. Right? But here, understand, properly used, options can save you money. So, all I want, all I want is the opportunity to take advantage of current prices and then to see if my thesis plays out. If it does, I can exercise the option before the 2025 expiration date and get 100 shares at a price I agree on today. If Open Door goes back to its all-time highs or anything close to it, or just its historical mean price, you're printing money. Understand, for every dollar, just $1, that Open Door increases in value, that would allow you to collect $100. Right? So, right now I'm playing with, I have an Open Door option that expires in 2024. I'm going to get Open Door options that expire in 2025. The idea is that there's going to be a pivot away from the Fed hiking rates, right, in the coming months. And that's going to lead to more money printing to help countries like Germany, the United Kingdom, Argentina, where they have a 70% interest rate, address their problems. That'll help the West deal with their rising unemployment, deal with their energy dependence that caught people off guard. Think about how ridiculous that concept is, right? But energy dependence, which caught several countries off guard, that's going to help us through this coming tough time, this 1970s redux. And as they print money, just understand that's going to help facilitate the housing market. I still think housing is going to lose. Um, House prices are going to drop. But the money printing is going to help revive the housing market at different price points. And as people get into the housing market, the consumer is going to want the convenience of using the internet. Right? So if I'm right, great. I can walk down the street in early 2024 or 2025. I can call and say, hey, I want the shares delivered. Every call option is 100 shares. I want the shares delivered at September of 2022 prices, the prices we agreed upon in September of 2022. Right, folks? You're going to have markets with significantly different cost structures in 2024 and 2025. Right? I believe that open is going to be in a, that's a symbol, OPEN. Google it on Yahoo Finance or Google Finance. I believe it's going to be in a materially different place than now. What I want people to also envision is that there are other stocks out there that right now are mispriced, where the price is going to change materially if the Fed backs off its money tightening, which I believe it will have to, given, to quote Bob Marley, all this trouble in the world. Anyway, that's how I see it. Just understand, when a pivot happens, sound money, natural resources, right, fossil fuels, I believe that's where you want to be. You want to think in terms of finite assets and sound money, right? That's going to rule the roost in a world of increased fiat printing, too much debt, right? Debt forgiveness. Politicians so desperate that here in the United States, without the approval of Congress, the President of the United States is attempting to forgive student loans, which is arguably regressive. Right? Think about that for a moment. That's going to end up in the courts, but think about that for a moment. These are desperate times. In desperate times, there are opportunities. I would encourage people to look hard, to study and look hard at long-term call options. That's how I see it. Let me hear from you. I hope you leave your comments in the comment section of this YouTube video. Thanks for stopping by.